CNBC just reported the IRS just made some major announcements. And so I need you to dial in for me. I know I've been saying like 20, 25 minutes, 15 minutes. Excuse me. Some of y'all been complaining in the chat. My team has told me. I told them, hey, I am a preacher at heart. So sometimes we have three closes. And so if you don't like the way that I deliver my message as far as in my time, or if you feel like I can get to the solution a little bit quicker, I say this respectfully, but boldly. Go check out another channel. My channel is for everybody, but I have a lot of people who are not financially there yet. So before I can get to the solution, I have to respectfully break down the problem so that they can understand it. So when we get to the solution, they know exactly what we're talking about. So if you're beyond and if you only need advanced stuff, I'll say this respectfully, unsubscribe, because I'm just not the channel for you. And that's fine. I know I'm not for everybody, but I want to serve the people who are often overlooked. And oftentimes we want to go straight to making $1 million when people just need to know, how do I budget the $500 that I have? Oftentimes we want to talk about building this big business and people want to know like, hey, what do I do with the paycheck that I have? And so I'm called to the average everyday person. And that's just my heart. So I'm always going to speak from a middle school perspective. And my prayer is that we all get to an advanced level here soon. But I'm always going to be here for the individuals who need a little bit more love, a little bit more attention, a little bit more understanding so they can really make proper decisions. But today, in this video, I don't know how long it's going to be, 20, 30 minutes, and I'm going to take y'all's questions and get up out of here. But I'm about to share with you something that could literally, when I say this, literally save you thousands of dollars, I would say this time next year in the year 2026. The IRS just dropped some major changes in the tax brackets. And here's the crazy part that really got me. We are announcing these crazy changes. Not crazy changes. We're announcing these major changes while furloughing nearly half of their workforce. So while nearly half of the workforce is going, we make an announcement of something of this magnitude. So today I'm going to spend some time breaking down everything that you need to know from a average person perspective. All right. We're going to break down the 2026 tax brackets. What is the tax brackets, right? And the new standard deductions and the hidden changes that could either cost you money or, watch this, save you money, depending on whether you're paying attention or not. All right. So by the end of this video, I'm gonna say this one more time. You're gonna know about four things: the exact income levels that push you into a higher tax bracket. Number two, how much the standard deduction increase and what that means for your wallet. Number three, the changes to capital gains, estate taxes, and tax credits that a lot of people are not talking about. And number four, the most important thing, that action steps you need to take right now to prepare. So I'm going to go through this, but it's important for y'all to rock with me so that way we can get to, I would say, to step number four, so you can have the action steps. So listen, as I normally do, because oftentimes my professors are watching this and they're like, hey, right now we need to separate you from a financial influencer to a financial expert, because if you want to get your doctorate with us, we need to make sure that you're quoting things correctly. So for every live that I do, and if I'm responding to something, y'all, I want to make sure that I am properly quoting so you all can see where I'm getting my information from and where I'm getting my research from. And so up on my screen here, you will see IRS announces new federal income tax bracket for 2026. I have pinned this at the top of the chat if you're just now tuned in. I am also going to make sure that this is inside of the show notes so you can read this for yourself. This just came out October 9th of this year. I'm not going to read all of it because I'm about to break it all down for you, but I encourage you as I am talking and when we get off of this, hey, you guys, go back and do the research for yourself. Go back and do some of the studying, read the article and look up some different articles. But here's what I need you to do. I need you to drop a comment right now and tell me this. Tell me this. Did you even know the IRS announced some major changes? Because the truth of the fact is, I bet you a lot of you all had no clue. And for me, that is a problem. And that is why I want to get on here as much as I possibly can and just make sure that I give you all a little bit of information, give you some practical things to do and things to not do, and give you some information to where you can go do more research for yourself. And so I want to give you some context up front first, right? I want to give you some context. Every single year, the IRS adjusts tax brackets for something called inflation. All right. So for those of you all who may be super advanced, you may want to just unplug for this part because I want to break this down for individuals who may not know these terms, or they may have heard of the terms, but they don't fully know what they are. So inflation is basically when the cost of everything goes up. So this is going to be your groceries, your gas, your rent, everything costs more. So inflation simply means prices go up. Prices go up. So the IRS says, okay, if everything costs more, we need to adjust the income levels for tax brackets so people aren't unfairly pushed into higher tax rates just because of inflations. Do you get that? All right, talk to me in the chat. Let me know. Let me know. Now, Anthony, why does this matter to me? Let me break this down very slowly for you so you can understand. So let's say this year, 2025, you made $50,000 and you were in the 22% tax bracket. Well, if inflation goes up and your boss gives you a 3% raise, now you're making $51,500. Without these adjustments that we're about to go over today, you could get pushed into a higher bracket even though your purchasing power didn't really increase. Simply, you'll just be keeping up with inflation, but your purchasing power really didn't increase. Now, here's the stat that should wake all of us up. And for those of you who are watching live, and if you're watching replay, type this in the chat and type this in the comment section so people can see this, because this is very, very important. According to recent data, according to recent data, most Americans will retire broke. Most simply means above 65%, because that's the majority. And one of the biggest reasons, they don't understand how taxes work. Individuals not planning ahead. Individuals tend to react when tax season comes around, but no one goes into the tax season with a strategy. I remember this when I first started learning about taxes. I was completely overwhelmed. I thought this is too complicated. I'll just let my tax person handle it. But here's what I learned. When you don't understand your taxes, you can't make smart financial decisions throughout the year. You're flying blind. Let me ask you this question. I must be transparent because this is live and I want to talk to my people who's on live with me. And if you're in the comments, if you're watching the replay, just put it inside the comment section and I'll make sure that myself or my team responds to this. But how many of you all honestly feel right now in 2025 you're flying blind when it comes to your taxes? Be honest. Put me inside the comment section right now, inside the chat session saying, yeah, me, I feel like I'm flying blind. Like I only worry about taxes come January and February. But outside of that, I don't really think about taxes. I really don't care about taxes until it's time for me to get my tax refund check. I want to see how many of you all could be honest with me and say, you know what? I'm not that. Thank you for being honest. I see you, Ray. I see you, Marcel. I see you. I see you. I see you. Thank you for being honest. Let me ask you another question and drop it in the comments and drop it in the live right now. What's the number one thing about taxes that confuses you the most? When you think about taxes, what's the number one thing that confuses you the most? And my team is going to pay attention to what you're putting in the chat. And then about a week, we'll gather up what people put in the comment section. And we're going to bring on my tax expert, Shanae, and her team. And we're going to break this stuff down. But is it the brackets? Is it deductions? Is it credits? I want you to be very honest. This is a judgment-free community because we are called in the black. So the only way we can get out of the red, out of debt, out of the negative is by being transparent with some of the things that we are not familiar with completely. So that way I can educate you. And if I don't know it, I'm going to bring on someone who is fully educated in that area and we can help each other out. But I'm seeing it. Thank you. I'm seeing everything. How taxes are calculated. Deductions, tax rates, brackets. I'm seeing the majority of you all saying everything. I got you. I understand. I got you. So let's get into the actual numbers. For those of you who are just now tuned in, make sure that you check out the link that is attached above. You will see the article that we're basing this live on from CNBC, where they titled it "IRS Announces a New Federal Income Tax Brackets for 2026." All right, so let's get into the actual numbers. The IRS just announced in 2026 some new tax brackets, and here's what you need to know. All right, first, understand this. We have what's called a progressive tax system. That means you don't pay one flat rate on all your income. Okay, say one more time. We have this thing called progressive tax system. That means you do not pay 22% on $50,000 of income. You pay different rates on different chunks of your income. Think of it like climbing, I would say, the stairs. The first step is taxed at 10%. The next step is taxed at 12%, then 22%, and so on. You only pay the higher rates on the income that falls into those higher brackets. Do y'all need me to repeat that again? Because I need y'all to really understand what I'm saying. This is important for you all to understand. This is why I don't care what you all put in the comments. Oh, get straight to the point. No, I got to make sure that my people understand the basic stuff. We want to skip over the basics. We want to skip over the understanding to get straight to the money, to get straight to doing something else. But that's going to hurt us even more if we don't understand the basic stuff. I'm going to say this one more time. All right? Because I really want y'all to get this. We have what's called a progressive tax system. So this means if you're making $50,000, your first $10,000 of that money is going to be taxed at a different rate. Then the next $10,000 will be taxed at a different rate. It's just like climbing the stairs. That first stair is going to be taxed at 10%. Then that next stair is going to be taxed at 22%. I say step, right? Then the next step, that third step, will be taxed at 22%, and it moves on and it moves on. You only pay the higher rates on income that falls into those higher brackets. So for 2026, here are the most important numbers. Okay, here are the most important numbers. The top tax bracket, that's 37%, now applies to me. Single individuals, single filers making over $640,000 and $600 a year. All right, so if you are a single individual, if you're single, put I'm single in the chat. Let me see how many single people we have and see how we can connect y'all together. I'm just playing. If you're single and you make over $640,000 and $600, you're paying 37%. Now, let me paint it to you like this. Let's say you make $640,000 and $640,500. You're not paying 37%. Single people who make above $640,000 and $600 are going to pay 37%. Married couples. If you're married, put married inside the chat. Let me see my married people. Married couples filing jointly, making over as a couple God says when two become one, right? When you become one and you're filing jointly, you're filing your taxes together, because there are still some families, couples who file separately, right? But if you're filing jointly and you make above $768,700, right? I'll make sure I got these numbers right. All right, cool. Yeah. Let me show you all these numbers. They're on the article. I just want to make sure I got these numbers right for you all. You all can see here. All right. So if you make it up $768,701 or more, right, you're going to be in the 37%, right? 37%. 37%. And this is why I want you to come to the numbers, because it shows you the steps. All right. So let's say you're making $768,000. Look at this graphic. Look at this graphic. Hold on. I don't think I can highlight it. Does that work? Yes, there it is. So let's say you make $768,000. This is what I mean by progressive. All right. Well, your first $24,800 is gonna be taxed at 10%. You see what I'm saying? Then from 24,801 to 100 is going to be taxed right here 12% of the 2480 amount above that. Does that make sense? I need you. This is why I want you to go to the article so you can really understand and learn this for yourself, because I can't spend too much time on this thing, right? Now, most of you watching are not going to be in the top tax bracket, all right? And that's okay. We're going to, hopefully one day we're going to get you there. But here's what I really need you to understand. These adjustments affect every single bracket, not just the top one, not just the people making above $640,000 and $768,000 as a married couple. So whether you're making $40,000 or $400,000 a year, these changes do impact you. Now, the threshold did, how to say this? The threshold went up across the board. That means you can earn more money in 2026 before you get pushed into a higher tax bracket. And now, if I'm being honest with you, that's a real good thing. That is good news. That's not negative. That is good, because I want you to think of it like this. Imagine the IRS gave you a little more room to breathe. You can make a bit more when it comes to your money without getting hit with the higher tax rate. That's what these inflation adjustments do. All right. Now, here's something they're not telling you in the mainstream media. Now, wait, before I go here, is this making sense for you all? It's about 600 of you all on here. Is this making sense for you? All right. Kawaii Star, I see you're only making $96,000 a year. So at $96,000 a year, you are going to be in the 12% tax rate, above $24,800. So you're not going to be too high up there, right? All right. Married filing separately. All right, cool. I got you. All right, cool. Everything's making sense. All right. So while the IRS is announcing these helpful adjustments, they're also furloughing as far as in, letting people go, nearly 50% of their workforce because of the government shutdown. So what does that mean for you? What does that mean? It means if you need help from the IRS, if you have questions, if there's an issue with your return that's about to come up, I'm praying for all of us, because it's going to be hard as heck to get someone on the phone. The wait times are about to be insane because they're off. So can you imagine once the Democrat Party and the Republican Party comes back together and they bring back the workers? Do you imagine how much work the IRS is going to have to catch up on? This is why you need to be proactive this year. You can't rely on the IRS to hold your hand. You need to understand this stuff for yourself. So I want to talk real quick on I want to talk about, how do I want to say this? I want to talk about something that affects almost every taxpayer. And this is the standard deduction. You see, the standard deduction is basically the amount of income you can earn that the IRS says, okay, we're not going to tax this portion. It's like, hey, up until this portion, you're free. This reduces your taxable income. Now watch this. For 2026, the standard deduction is increasing to 16,000. Let me get this right. $16,100 for single filers, up from $15,750 in 2025. $32,200 for married couples filing jointly, up from $31,500. Now, I know some of you are thinking, okay, that's only a $350 increase for single filers. What's the big deal, AO? Huh. But here's the thing. In 2025, and correct me if I'm wrong in the chat, every extra dollar right now is actually a good thing. The IRS just gave you $350 extra that will not be taxed. So that's $350 now you can put towards groceries. For a lot of families, that's 3 months of groceries. Now that's $350 you can put towards gas. Okay, for the average car right now in America, you're looking at about 4 months of gas if you only doing that. Listen, at my financial level, if I can get $350 back from the IRS, please give it to me. Please, because that's $350 I can put inside of my nephews and my nieces' 529 plan. Listen, if you're a single filer in a 22% tax bracket, that extra $350 in deduction saves you about $77 in taxes. Now, $77 might not sound like a lot, but that's $77 you get to keep. That is your money, rather than sending that to the IRS. And I think this is one of the things that bother me about certain people. It's like, oh my God, just this $77. I used to be the same way. Can I be honest with you? Can I be transparent with you? I used to be the exact same way until I met a guy who makes about $500 million a year. And a dollar fell out of my pocket. And I didn't feel like turning back around. I was like, it's just a dollar. I watched a guy who makes $500 million a year. Well, I can't say he does. I think sometimes we got to be honest. His company makes $500 million a year. I watch him stop walking, turn around to go pick up $1. Here I go. I'm making good six figures at that time. I don't know. It's just a dollar. I don't need a dollar. And a guy who makes six figures a day, turns around to pick up $1. He said, well, since you don't want it, I want it. Put that thing right there in his pocket and didn't even budge, didn't even play around. But you know what? When I got home, he didn't have to teach me a lesson. Because here's what I realized. Average people think $77 is not a lot of money. Average people think that an extra $350 that's nothing. No. But wealthy people understand, man, every dollar has an assignment. Every single dollar has an assignment. And if I want to grow it, do you know what that $1 can do for me in compound interest? Because if I have that mindset, it's just a dollar, it's just $77. Well, that $1 adds up, that $77 adds up, and when you look back at it over time, that $77 ends up being $10,000, $20,000 over 10, 15, 20 years. Like, what in the world? So I had to shift. Like, just because I got money, boy, doesn't mean you need to blow it. And if you're married filing jointly, that extra $700 in deductions could save you around $154 in taxes. Listen, fam. Building wealth isn't about hitting home runs. It's about consistently making smart decisions with your money. $77 here, $154 there. Over time, it all adds up. Now, here's what you need to understand about the standard deduction. Most people, about 90% of taxpayers, take the standard deduction instead of itemizing. Okay, I want to explain to you. I want to break down the two options that you have every single year. Bear with me, and I'm almost done. I promise you. So I want you to get this information. So there's two options that you have every single year. Okay, there's two options. Two options. What did I say the options were? The standard deduction or itemizing. And I want to break these down so you have a clear understanding. Save this show, save this episode today. Come back to this right around December when you're going into January and you're about to file your taxes. But let's talk about the standard deduction, which is, I believe, the easiest route. Itemize your deductions, which I call that the detailed route. Right? It's very detailed. Like, you got to have all your receipts. You need to know where every single dollar is. And that's an easier route, right? If you do what I teach you, budgeting. Okay. You should only itemize if your itemized deductions add up to more than the standard deduction. All right, so let me give you an example. Itemized deductions include things like mortgage interest, state and local taxes, charitable donations like tithing and giving to your local churches or giving to a nonprofit, medical expenses over a certain threshold. Okay. So here's my personal, non-professional, as a financial advisor advice. Just as a guy who's educated and who practices and loves this space. If you're not sure whether to itemize or take the standard deduction, talk to a tax professional. But for most people, especially if you don't own a home or don't give a lot to charity or don't pay your tithes every month, the standard deduction is honestly going to be your best way to go. And I'm going to start over not paying your tithes. But let me say this as a quick pause, come back around to this, and we're going to come back around to this later on in the month. I think a lot of you all will get out of debt and experience financial peace quicker if you do pay your tithe. I'm going to say that. I know some of y'all would not. I know some of you probably will not agree with that. Some of y'all are probably saying, "Oh, here we go, being spiritual." Yeah, I'm gonna be spiritual. Unsubscribe. I'm going to always represent for the kingdom. I don't care. I'm oftentimes asked, Anthony, why do you think this way? Or why do you do this? Or why do you forgive? And why do you do this? And it's like, man, y'all, listen, God is still working on me. Boy, I got some things that I gotta get better at. And I will admit that I am still a work in progress. God is still maturing me in a lot of different areas. But one thing I do know is that when God can trust me with 10%, God, He's going to give me more because He could trust me with 10%. I mean, He could trust me with the other 90%. And I think the reason why some of you are struggling right now is because God just can't trust you. So you would rather pay your bills, you would rather do all this rather than say, you know what, God, thank you in the first place for giving me these resources. Thank you in the first place for giving me a job when we have millions of people right now without a job. We have 350,000 black ladies, black sisters who are looking for a job right now. God, thank you for giving me a job, and here's your 10% back. God, I love you. And we don't understand. I gotta keep on going. I gotta move on because I don't want to disrespect nobody's religion, but I got to say what I got to say. We don't understand the power of what happens in our finances when we trust God before we trust man and before we trust ourselves. You all would trust your tax return more than you would trust God. We would trust our bank accounts more than we trust God. The greatest compound interest, the greatest investment account I've ever invested into is God. Let me get back on track. I'm gonna do a whole show on that. I think a lot of us will be wealthier. I think a lot of us will get out of debt quicker. I believe that we would experience true financial freedom if we trusted God more than we trusted man. But I got a quick question for you because we're going to come back over here so I can end this live and take some of your questions. Do you take the standard deduction or do you itemize? If you know, put inside the chat right now. I take the standard deduction for the most part every year, or no, Anthony, I do itemize. All right, I do itemize. Let me know. All right, real quick, as you're typing in that comment, Now, I'm going to talk about some other changes here real quick. The IRS announced that you need to know about before we get off of here. Number one is the capital gains tax brackets. If you invest in stocks, real estate, or other assets, you need to pay attention to this. The IRS also adjusted the income threshold for long-term capital gains tax rates. All right, let me explain this. Long-term capital gains are profits you make from selling an asset you've held for more than a year. The tax rates are 0%, 15%, or 20% depending on your income. Here's the good news. Those income thresholds went up too, which means you can earn more before you hit the higher capital gains rates. Uh-oh, let me say it one more time. Those thresholds went up. So this means if you open up a Mumu account, for an example, you invested into and you got that free NVIDIA stock, which I need to see if they still have it. Now you can earn more before you pay capital gain tax. Why does this matter? If you're building wealth through investing, which you should be, this is extremely important. It means you get more of your investment gains. Now, here's the thing about capital gains. You only pay them when you're actually investing and building wealth through the stock market. And listen, I know for a fact, some of you are thinking, Anthony, investing sounds so complicated. I don't know where to start. I get it. I was honestly there too. But here's what I've learned. You don't need to be a Wall Street expert to start investing. You just need to have the right tools and the right education. Come on now, somebody. That's why I use the app Mumu. And let me see real quick if they still have it. I think they still have it. I just want to make sure before I say it, because Mumu is the best app right now out, because what I like about them is they're give oh my gosh. They are. They're giving away free NVIDIA stock. It's an investment platform that makes it super, 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 super simple. I mean it, super simple to start building wealth through stocks, ETFs, and other investments. Here's what I love about Mumu is that they have educational resources so you can learn as you invest. The platform is easy to use even if you're a beginner. They have tools that help you research investments before you buy. And right now, they're offering some incredible bonuses. As you can see here, you can get, if you join through my link by going to anthonyoneil.com/Mumu. Let me bring this up for you. If you go to anthonyoneil.com/Mumu, you will get 1,000 NVIDIA stocks. Now, let me pull out this because some of you will have emailed me and some of you will have already opened up an account. You get up to $1,000 depending on how much money you put in, and you have to wait 30 to 60 days because they want to make sure you don't put the money in there, get the stock, and then pull your money out, because then it is a negative. And so you'll get up to 1,000 free stocks. And if your money sits there, as you can see, you're going to get about 8.1% in APY, right? And so I would highly encourage you, if you're serious about building wealth and taking advantage of these capital gain taxes rates we just talked about, go to anthonyoneil.com/Mumu and check it out. Because here's the truth. The wealthy understand capital gains because they're invested. They're not just working for money. They're working to buy back their time. And they're working so that their money can be working for them while they're asleep. They're working so while they're on their kids' soccer game, while they're out on vacation, their money is still making money because they have it invested in apps like Mumu. And that's exactly what I want for you. All right? That's exactly what I want for you. So go to anthonyoneil.com/Mumu. Get that 1,000 free stock. And if you're saying, hey, Anthony, I don't know how to operate the Mumu app, hey, go to my YouTube page. Click on live. I did a step-by-step video pulling up the Mumu app and showing you how to purchase your first stocks. Get the free stock while you can. They told me last month they're cutting it off. It's still up there today. I don't know when they're going to cut it off. But y'all, listen, man, get this free stock. All right, let's keep moving. Number 2, estate and gift tax exemption. Now, this one applies to people with significant wealth, but it's still worth knowing, because the majority of you all, we're going to be getting out of the red, getting into the black, and then from the black, we're going to be building wealth, right? So the estate tax exemption, that's the amount you can pass on to your loved ones without paying federal taxes, federal estate tax, I would say. This also increased in the year 2026. This for me is about legacy. This impacts me personally, right? This is about being able to pass wealth down to our children and to grandchildren without the government taking a huge chunk out of it. If you're serious about building generational wealth, and I know honestly many of you are. As a matter of fact, I'm going over my time. If you got to go, God bless you. Come back and watch the rest of this later on. But I want to answer this question: how many of you are sick and tired of living paycheck to paycheck, and you're ready to start building generational wealth? When I say generational wealth, to where your children's children, to where your children's children, I'm saying it one more time, to where your children's children can benefit from your wealth today, that it sets them up to be even wealthier to where they can build wealth for their children's children. How many of you all are ready for that? Just put ready inside the comment section if you're watching this right now. Because here's the truth. I know a lot of you all are. That's what we talk about here within our community here on In the Black. And the truth of the fact is, no matter what stage you're on, you need to understand estate planning. You have to understand estate planning. Let's keep on moving. Number 3, earned income tax credit. We call this the EITC, is a tax credit for working people with low to moderate, I have to say that, income. All right. The income limits for eligibility also went up for 2026. I'm looking at y'all as my camera. You all are over here chatting, and I'm looking at the chat, and then my notes are over here. So if y'all see me looking all over the place, it's because the camera's here. Y'all are here chatting, and then my notes for you all are right around this area. So I'm seeing the chats right now. Y'all really going in, man. I love this. Now, the EITC is huge for our community. You see, the EITC can literally put thousands of dollars back in your pocket. But here's the problem. Millions of people who qualify for it don't claim it because they don't know about it. How many of you all, put inside the comment section for me. I wish I had polls, but it's just me doing this live. How many of you all heard of the EITC credit? Let me know. If you are someone if you or someone you know is working but struggling financially, make sure you look into whether you qualify for the EITC. Honestly, this could be life-changing for a lot of you. Honestly. Ask your tax preparer, ask your financial advisor, ask someone like, hey, listen, do I qualify for this? Even if you think you don't, still ask. So that way you will know if you do or if you do not. Like, know for sure if you do. All right. So we've covered a lot. We've covered a lot. Let me give you the exact action steps I need you to take moving forward. All right. I'm gonna give you some quick action steps. Someone do me a favor, type these inside of the comment section, and type these inside the chat right now because I won't be able to do it. I'm ready. I'm ready to drink the rest of my juice and rest. All right. Here's action step number 1. I need you to review your current tax situation. Pull out your 2024 tax return. Look at your taxable income. Look at what bracket you're in. Then estimate what your 2026 income will be and see where you fall when it comes to the new bracket. All right. Action step number 2. I need you to adjust withholding if needed. If you got a huge refund last year in 2020, well, this year in 2025 from 2024, you're giving the IRS an interest-free loan. Say it one more time. If you got a tax refund in Q1 of 2025 from the year of 2024, you are giving the IRS an interest-free loan. That is not good stewardship of your money, because if it was reversed, the IRS is not going to let us keep their money without charging us a penalty and interest. So if you owed a lot, you might need to increase your withholding. This is where I say you sit down with your tax person and say, hey, am I doing this right? Or you can go and use the IRS withholding calculator right there on the irs.gov website to get it right. Now, speaking of refunds, let me tell you something that's super, super important. If you're getting a big tax refund, that's not a win. That's your money that you let the government hold all year for free. Say one more time. It's not a wise thing. I know some of y'all think, well, Anthony, that's my way of saving for vacation because I don't see it. Mm. But Anthony, that's my way of saving for spring break because I'm not tempted to see it. No, I need you to get mature. I need you to get mature. I need you to get mature when it comes to that. Here's what you need to do instead. I need you to adjust your withholding so you're not overpaying, and then take that extra money that you're going to be getting on your paycheck, right? And put it somewhere where it can actually work for you, to where you can put it into a sinking fund. You can put it into a spring break fund. You can put it into a vacation fund. And I'm not talking about a regular daggone savings account paying you 0.01 to 0.40% interest. Heck no. I'm talking about putting it into a high yield savings account. Right now, there are high yield savings account paying over 4.5% of interest. That means if you put $10,000 in there throughout the year, you're earning about an extra $400 to $500 a year just letting your money sit there. Y'all, that is 100% free money. Somebody put free money inside the chat, inside the comment section, please. Like, free money. It's just sitting there. I did a whole show on the top bank savings accounts, right, that you can get into. And y'all, listen, I'm not exaggerating. Yeah, and I try to make sure that I don't talk over someone's head. But I was there. I was living paycheck to paycheck. I was sleeping in the back of my car. I come from a modest, hardworking military family. I didn't get $1 million. Heck, I didn't even get college paid for. Heck, I had to pay for my very first car. I had to get a job to help my family out. So I didn't get this passed down to me, but the financial status that I'm on today is simply because of one, God; two, utilizing my tools and my gifts and my talents; three, maturing, evolving, and getting to where I'm at today and really practicing money. So I've been able to put a lot of money into several high yield savings account, and those high yield savings account pay me a lot of money a month in interest. So now for like the last 2 years, I've never paid for a date from me actually earning the money. I've used the high yield savings account interest to pay for the date. So for an example, if my money made, let's say, $350 last month, right? Well, then I got a budget of $350 a day for this month. Now, I make more than that because I have several different ones, but that's my way of having fun. And if I'm blessed and I meet a young lady and I'm like, boom, I want to take her out, I'll look at what I got. Boom, that's my budget. Boom, that's my budget. I didn't have to go speak somewhere to get it. This is exactly what I recommend to people who are building their emergency fund. Excuse me. This is exactly what I'm saying. You want your money to work for you. Why are you going to leave it in the IRS hands? Why are you going to trust someone else to do what's right for you when you can do what's right for you and make more money doing it? You want your money making you more money as much as possible every single day. You want your money to be accessible. So if you want to check out a high yield savings account, we actually just updated this list, right? You can go to anthonyoneil.com/savings. I'm going to show you that right now. Just pull it to make sure. We update this list we update this list every week, not every 2 days. I'm lying. Every week. You see here, SoFi is offering a 4.5% APY. Now, yes, listen, this is limited time offer. So you'll get 4.5% for up to 6 months with eligible direct deposit. Here's what I recommend to people. And what I like about the direct deposit is If you click on it, they're going to give you $300 once you open up the account. What? So not only am I going to get 4.5% of an APY for the first 6 months, but then also they're going to give me an extra $300. But Anthony, I already have my money going to a direct deposit account. Okay, cool. Let me teach you the game. This is what you do, and this is what I was doing when it comes to when I had a job. Actually, I do it now. I do it now actually with my job, with my business. But 70% of my money goes into my primary account, and then I have several savings and investment accounts. And then my another savings account, or an account specifically for my tithes and offering. I have a direct deposit going into my SoFi account, which is my high yield savings account for emergencies. I have another one that's going. I have another high yield savings. That's my big boy. That's my big account. It goes there. So if you want to activate this, okay, keep your primary one, but then take a portion of your money and direct deposit it into the SoFi account. Make sure you open up a checking account. This way, now, how do I say this? Because I love SoFi and I love what they're doing. But you're honoring their request while still doing what you need to be doing as well. Make sense? It's almost like you're legally and ethically and even morally playing the game. Like I don't want to change my entire account over to SoFi. I don't want you to do that, right? Unless you want to do that. But me, I bank with Truist. That's where my business bank account is. So I love that, right? But when it comes to my personal savings, yeah, man, I'm rocking with SoFi all day long. So listen, all you have to do is go to anthonyoneil.com/savings. There's other accounts on there, Barclays, Bread Savings. I'll pull this up for you all so you all can see it. But Barclays is real good. They're doing 3.9%. Now, Bread Savings is new, y'all. Bread Savings is new. They are offering 4.2.5% APY. Now, here's what I do like about Bread Savings. Can I be honest with you? Here's what I do like about Bread Savings. And it's something for y'all to consider. Bread Savings doesn't have 4.25% for 6 months. They don't. So you can get 4.25% solid for the year and moving forward. The downfall with them, though, is they're not going to have a checking account for you. So you're not going to have a Visa debit card, right? And they're not going to give you any extra money. So you got to come over here and make what decision works best for you. You make that decision. I want you to do what's best for you. SoFi, I rock with SoFi. If I had to do it all over again, would I choose Bread Savings? I'm sorry, Bread Savings. It all depends. For one of my accounts, for sure I would. For sure I would. But I do like the quick, accessible debit card functions that I will get from SoFi. So it's totally up to you. Go to anthonyoneil.com/savings. Check that out. I promise you, you will enjoy it. All right. These accounts are great accounts. All right. They're FDIC insured and you are covered. So that's how you make your tax savings work for you instead of against you. All right, let's keep on moving. Here's action step number 3. Maximize your deductions. Whether you're taking the standard deduction or itemizing, please make sure you're not leaving money on the table. Keep good records of your tithe and offerings, right? Because those are considered charitable donations. Keep good records of if you're like, I just donated a whole bunch of clothes. I lost 36 pounds. I went from a waist of a 34 to 31. There are some jeans that I just didn't really like anymore, so I donated those. Like, this is a small shirt and it's still big on me, as y'all can see, right? So I got all this room right here, but it's an oversized small. But you can't fix these shirts. So what I did is all the shirts that I couldn't fix, I donated them and I had them give me a receipt of how much money they'll give me for it. So now I have it inside of my file cabinet to where next year I'll be able to go off and write this stuff down. Watch this. Y'all need to be writing down your medical expenses and business expenses if you're self-employed, because all of this is important information for you to give to your tax preparer and your tax expert when it comes time to file. Here's action step number 4. Plan your investment moves strategically. If you're thinking about selling investments, understand that the capital gain brackets could affect you. Sometimes it makes sense to honestly wait to sell. Sometimes it doesn't. I need you to do the math, but talk with a professional, a tax professional, before you honestly do it. All right. Here's action step number 5. I just said it. Please talk to a tax professional. I'm going to be bringing on my tax professional and her company that I believe they are the best. They have saved me money. And let me say this, and I'm gonna end here. Average income. Oh, no, it's not average income. Average mindset people say, I want to get the most money on my tax returns. Wealthy mindset individuals, and keyword here, what I'm saying, listen to what I'm saying, y'all. Mindset. Not wealthy people. I'm talking about they have a wealthy mindset. Just recently, I would say, like the last six years, my mindset has evolved in this area. It's like, okay, wait. Now at the beginning of every single year, I have a tax strategy meeting with my tax professionals. I'm like, hey, they ask questions. Do you plan on buying a rental property? Do you plan on buying anything? Because some year we may not write off as much, so we can show income depending upon if we want to buy some land or some property. Well, if we have no plans on buying property, right? If we don't have any plans on making any major purchases, then we can write off everything. And sometimes legally, ethically, morally, and spiritually, because I'm a spiritual person, we can go negative. And we did that for the year 2024. And so this will be the first year in the 6 years of my business that we actually broke even to where I will not pay any federal taxes, legally, ethically, morally, and spiritually, because we had a tax strategy. Hey, I'm not going to make any major purchases. Right now, I'm saving up. I want to just build the company. I'm working on something big. I'm writing my book. So I'm not going to add on anything extra major right now. Cool, great. So we're going to write off everything from that year. Cool, great. 2025, we haven't purchased anything major. Now, 2026, I plan on getting married, hopefully, and I can buy a house. My strategy is going to change next year. So hear me clearly. Getting this kind of information is important. I can give you information, but everyone's situation is different. If you have complex finances, multiple income streams, investments, a business, I need you to invest into a good CPA or a tax advisor. Because my CPA, oh my gosh, the amount of money she saved me from paying in 2024, hands down. And I pay her a lot of money a month. But when I pay her a month, she saved me from paying hundreds of thousands of dollars in taxes. So, as we close and I take your questions, I want you to write these down. I want you to write this down. Screenshot this video, share it on Instagram and tag me, so we can let people know, hey, these are the things that are coming up. Anthony gave some valuable information within about, I don't know how long I've been on here, right? But the 5 steps that I just went over could save you and would save you thousands and thousands and thousands of dollars. All right. So I'm not going to repeat myself. If you just logged on, please go back and rewind. I genuinely do try to keep these right around 20 minutes, but it just be so good that I'll be looking at the chat and then I'll be wanting to say other things. And so I apologize if it is a little bit longer than normal. But I get excited about having this conversation with you all. I get excited about, you know, I'm going to stop doing it, but I see the blogs about me. I see the comments. Anthony doesn't really go deep. Anthony teaches the basic stuff. And I'll be honest with you all. I used to allow that to bother me. And then one day my business mentor said, "Hey Anthony, who's the person who said XYZ?" I tell them the person and they'll go like, "Oh, this particular person doesn't even have 50,000 people following them on YouTube." What's the other person's name? We'll pull that person up. Oh, this person only has 102,000 people following them. Huh. Huh. Anthony, what's your name? I was like, Anthony O'Neill. You're on YouTube, right? I was like, yes, sir. Huh. Oh, you're you're almost at 1 million. So these are 1 million people who took the time to hit subscribe to your channel, who took the time to watch at least a few of your videos. These are 1 million people who are saying, man, in some way, form, or fashion, maybe not every way, maybe they don't agree with everything that you say and do, Anthony, but there's something about you that they relate to. And he was like, Anthony, you're not for everyone. But there's 1 million people who said that in some form or fashion, Anthony is for me. Hey, y'all, and I mean this, man. I'm not going to change who I am. Like I'm not going to stop representing for the average person, because I know what it felt like to be the average person, and someone who was successful didn't want to break it down so that way I can understand and grow and evolve slowly. They wanted to only talk to people who make millions and who are deep and intellectual, and I'm like, man, okay, wait, so how do I get the freaking information? Like, how do I get on your level if you're not willing to spend time and teach me? Then I meet Dave Ramsey, which is why I could never say nothing negative about that man, because he takes the time to teach the average. He brings financial literacy to the cookie jar and places the cookie jar on the bottom level so that a 5-year-old can eat from the cookie jar. And I believe he is the strongest financial name in America. In America. His process is brilliant. The baby steps. It is brilliant. And I used to allow that stuff to get to me. And so I know some of y'all saying, oh, here we go. It took him so long to get to this. It took him so long to get to that. Or, hey, y'all, listen, I understand. If I'm not for you, I respect it. Thank you so much. I would hate to see you unsubscribe, but I will honestly respect you unsubscribing, and go subscribe to someone who has what you need. Because my community, I'm here for the everyday person. There's a study that just came out and said that 62% of American people, their financial IQ, if it was a grade A to F, is a D plus. It is a D plus. I want to love those people. I want to create a space and a place where those people feel comfortable asking me the most embarrassing financial questions per their mindset. And I love them and give them the answer to get them from a D plus to an A plus mindset. And that's why I can't wait to announce what we're going to be doing, because we're going to be doing that. I can't say too much. My team won't let me say it, and I don't want to give away too much. But when I say what we're about to do, it has not been done within the African American space. What we are about to do, it just has not been done. And you're not going to even have to think about the price. I promise you. I'm not charging you $100, $50, $5,000. I ain't doing no mastermind. No. I'm going to give you a tool and a resource that is going to be fully for you. That is going to walk you through every single day, literally, to the day you become debt free, to the day you invest your first money, to the day that you start building wealth, to the day you purchase your first home. I can't wait. So listen, I gotta go. Let me look at some of these questions, man. I'm so I'm so sorry. Catherine, we got a million followers. It ain't me. It's we. We are a family. All right. We are a family. So we're at a million. Do me a favor, y'all. If you enjoyed this live today, if you can hit the thumbs up for me. It's about 700 of you all still watching in a midday on a Thursday afternoon. Thank you so much. Elijah said maybe even an F plus, but it's all good. I appreciate it, man. I appreciate it, y'all. On Monday, I think it's Monday or Wednesday of next week. I really want y'all to stay tuned, man. I did a lot of research on debt relief companies. I've been getting a lot of phone calls on voicemails and questions and emails from people saying that they're about to file bankruptcy, that they're so much into debt that they are so scared financially that they are about to file bankruptcy. And so I spent a year studying the debt relief industry. I called hundreds. No, I'm exaggerating. I called almost 100 debt relief companies, and I did some deep diving. And so next week I'm going to have an honest show about my perspective on that, because the last thing I want you all to avoid at all costs is the IRS and bankruptcy. Those are two things that I just no, no, no. Do not play with the IRS and do not consider bankruptcy. Don't. And so next week I called them. I called 100, almost 100 debt relief companies, had real conversations. Even I would say about the 10 that I narrowed things down to, I even went through some of them like up until the point of signing, because I don't have any debt. But I wanted to ask them questions. I wanted to experience them. I wanted to see how they treat people. I wanted to see how much time, how often did they call me? Like I wanted to experience, and this is going to be a very transparent and honest show. And so I think my team said it's either coming out Monday or next Wednesday. But this is a show that you do not want to miss. It is a show that is real. And I'll give you a secret. About 85-90% of them debt relief companies are garbage and trash and predators. But there are some out there that I believe are doing a great job, and but they're still not my number one option. But there are some great options if you are looking into those companies, because here's what I learned, and then I'm done. Like, y'all can go. I'm just talking now. I'm just talking. Here's what I've learned as I've evolved. Just because I wouldn't do something doesn't necessarily mean that it's the wrong thing. Yeah, right. Just because I wouldn't do something financially does not mean that you should not do it. No. I think one of the things that I really want to empower our people is I want to provide the education, and I want to provide my perspective. And from my education and my perspective, I want you to make the right decision, or make the decision that you and your spouse or you feel comfortable with making, right? I'm not gonna be this dogmatic kind of guy, like, oh, you better do this, or you're stupid if you do this, or no. That's not my that's not my swag, right? My thing moving forward is, let me educate you on the questions, on the things that's happening. Let me give you my opinion. Then from there, while you have the education and while you have my opinion, you make the best decision of what you want to do. Some people may look at my lifestyle. I spend my money on cars. Like, that's where I splurge at, right? I'm not living in a two, three, $4 million home. I'm living in a traditional neighborhood, a traditional home that I did, clean up, really, really good. But it's not, no, I didn't spend $1 million for this home. I didn't ball out like that, right? But I think that's the whole purpose of financial freedom, is to where I can make the decisions that I want to do with the resources that I have. And so on this journey, y'all, I'm going to say, hey man, I did the research. Here's what I found. Now, would Anthony O'Neill do this? Probably not. But just because I don't do something doesn't mean that you shouldn't do it. Just because you do something doesn't mean that that person should do it. This is our personal journey. And we all need to get the information, then go back, pray on it, sit on it, do some more personal research, and then make the best decision for us. And so, man, oh man, uh, what's that? Don, what's that? Don, man, I'm so sorry you just, I'm so sorry you just did that. I wish you would have, I wish you would have watched this show beforehand. I wish, man, I'm so sorry. Man, I'm so sorry. I hate it when I see people say they just filed bankruptcy. I really do. But hey, again, you made the best decision that you felt is good. I am not a fan of bankruptcy. That is something that I would avoid at all cost. Which is why we're going to have this conversation about debt relief companies. That I think a lot of people should consider it. But here's what I love, and this is what I love about the show. You gotta make sure you watch it. It's either on Monday or Wednesday of next week. I am not telling you to pay them. I am not telling you to sign a contract. Here's what I'm telling you. Fill out the application. I'm attaching 15 questions that you need to ask them. At the end of that question, you're going to write down the answers. You and your spouse are going to think about it and pray on, do you all like the answers? Does your spirit sit well with it? And if it does, proceed forward. If it doesn't, run. Period. But I've positioned it to where I'm going to give you the questions that's going to start jogging your mind. As you're asking these questions to them, it's going to bring up other questions that you will want to ask. You write these down. Do not pay them a dime. Do not sign no contract. And if they force you, oh, I'll walk you through everything, man. I set this thing up so good that these debt relief companies probably ain't gonna like me because I'm giving y'all the real questions of what to ask them. Because I don't want you to get gypped. You're working too hard to just blow your money and to F up your credit score. You're working too hard. So there's a strategic way on how to proceed forward with it. Listen, I got to go. If you're just now tuned in, go back and watch this from the very beginning. Make sure that you go to anthonyoneil.com/Mumu so you can start investing in that. And then you'll learn more about the capital gains tax in the beginning of the show. Make sure you open up a savings account by going to anthonyoneil.com/savings. And I promise you will thank me later. If you're going to do a savings account, man, look into SoFi or Bread Savings. We update that site, anthonyoneil.com/savings every single every single week. So I really do think that you'll enjoy it. And